today, as you guys know, right, at Giving Tree, we have many different outlets, right? We have 80 plus, near 90 different lenders that we use, whether it's non-del or wholesale. You guys all obviously are aware that, right, we have the conventional products, the Govy products and jumbo, as well as many non-QM options that are, something that's very popular. But we also have line of credits, right? And with the amount of equity that Americans have, home ownerships, through home ownership, and with credit, the rise in credit costs and credit interest rates, it's not unusual for someone to have a 21% or even a 27% credit card. And you guys all know this, right? We have the U.S. is at historic highs with credit card debt. You guys all know that. It is a perfect, and just really an easy sale, right? And a very easy sale for a homeowner should they qualify. And there are multiple options to draw from the equity, whether it be 7, sometimes in the 6s, 8, 9, even 10%, and pay off those high yield interest rate, revolving credit debt. So I will be honest myself, I haven't, I don't do line of credits regularly enough, but today Peter is going to go over the different types of HELOC programs that we have. I believe we're going to watch a video. Is that correct, Peter?
Yes. We have a video.
Yes.
And after we watch the video, I have quick announcements to share. So please stay tuned. It will be about 27-minute video. And I submitted 4 refinances selling this product, not because it's better than the other. It was easier for me to sell. So learning the mechanism, understanding the purpose of this product will help us to connect one more applicant. Okay? So let's dive in.
The hour, so we don't want to keep everyone. Before we get started, and for me to introduce the speaker here today, I just want to welcome everyone. My name is Carl Markman. I'm the Director of National Sales here at Remnant Wholesale. We're very, very thrilled to have everyone here. The HELOC volume, I'm not sure if it's affecting you and your own origination so far, but I will tell you that at Remnant Wholesale, our volume is hitting records every single month in the hundreds and hundreds of millions of dollars. So there's an absolute need for this product. Rather than refer your customers off to a bank or a credit union, a lot of our customers need the money now as quickly as possible. So this is the best product for them. And then obviously down the road, we have a whole Rolodex of potential cash out borrowers down the road once rates start to come down. So what I'd like to do is introduce our speaker, Cara DiStefano. She handles our HELOCs across the country, and I'm just going to hand it off to you, Cara.
Great. Thank you, Carl, and thank you for everybody for being here on time. I see a lot of new names and some familiar names, so hopefully everybody gets something out of it. And I think our presentation this month is very timely because we're really talking about, tackling post-holiday credit card debt. Let's face it, we know that a lot of people have charged up a lot of things with credit cards. We had some interesting numbers and statistics coming out, which I'll show you, and we'll cover why this product is important today. What we're going to look at, why a HELOC versus something else, and we're going to talk a little bit about the platform and the portal and the opportunities in the market today. So things that you need to know, again, this year holiday spending remained high, just like it has in the years past. It topped $1 trillion. With a T. That's kind of crazy when you think about it. Most of the people are going to carry holiday debt into 2026. There was a survey that was done by the National Retail Federation that said 70% of the credit card users are going to carry that balance into 2026. And think about this, the average credit card APR is 22.25%. That's insane. So underlying debt levels stayed elevated in the holiday season. Total household debt is at $18.59 trillion, and the credit card balances are up 5.75 year after year. So people are carrying more credit card debt these days than they were, say, pre and during COVID. The credit card debt is going up. But at the same token, HELOC balances are going up. There are outstanding $422 billion outstanding in HELOC balances, and we can attest to that because we certainly have seen our volume increase year after year, and it's up by $105 billion from a low in 2022. So this product is really suggesting that the consumers really want to tap into their equity and gain that wealth again from that. Now, why does this matter to you? Well, again, think about it. Many households are entering in with that credit card debt after the holidays, and they're going to be having higher revolving balances. They're going to, look at these things by hitting higher monthly minimum payments, and they want to lower those payments to a full, without that pressure of refinancing those 2 or 3% interest rates that they had. So who are the clients that you want to be targeting? These are your targeting people, credit card clients who remain, who keep a balance and they're going to carry them for a few months. You have high income spenders, people who have very complex tax cash flow. We're coming into tax year. People are going to start having to pay their taxes, and now they're, looking at maybe holding back on those credit cards for a couple of months and just carrying minimum payments because they know they're going to have a tax bill that's going to come through. They want to optimize their cash flow versus the fact that they may not be struggling. They may have recent big life events, a new baby, maybe there's a wedding on the way, a divorce, medical situation, tuition for college. All those things trigger high revolving balances and the desire for them to reorganize that debt into one payment. And then you also have, as we mentioned, equity-rich rate-locked homeowners. Everybody who closed on a refinance back in 2020 to 2022 with those 2, 3, 3.5% interest rates, they don't want to lose that interest rate and do a whole new refinance, but they still want that flexibility of tapping into their equity and utilizing it. So here's some of the things that we do offer with the HELOC. Even though we are talking about debt consolidation, keep in mind we do allow this for home improvement. We do allow this for people who need to pay college tuition, helping your kids buy a new home, helping yourself purchase maybe a second home or an investment property. Weddings, weddings are up to 6 digits these days. And I happen to know because I'm doing a loan for a friend of mine right now who is anticipating a wedding for his daughter in the 6 figures. Vacations, people are taking very high-end vacations and want to utilize that and pay for it as well. The key to our product is it is available in all 50 states. And this is not your credit union or bank account bank HELOC. This is a HELOC that closes in days, not in weeks or months that you're used to when you go to the credit union. We average about 5 days, but in many cases, we close these things in as little as 1 day. Sometimes we close them in as little as a few hours. We've seen that as well. The application is branded to you. So the beauty is you're actually able to brand the application, send the link out to the customer. It has your beautiful face up there along with your information on it. The MLO portal will provide you complete transparency, so you see everything every step of the way. And we did just roll out our cockpit, which really makes everything very easy touch at a glance for you as a loan officer when you're going into your pipeline. The cool thing about our product compared to many other digital products out there is that we have white glove service to you, and it is proactive, not reactive. So the key is we want to get you to a yes more often. Many of my competitors do not have that human touch involved with the product like we do. So that is one of the beauties of our product compared to everybody else. You will actually be able to deal with somebody directly from our team, and as well as your account executives. You've got some seasoned account executives here over at Redmond Wholesale that will help you get more loans closed. And it gives you the opportunity to retain those customers if the interest rates do come back down and they want to refinance into a first mortgage at some point. That's going to give you the opportunity to be in front of them, because if you're not in front of them, your competition is going to be, because we closed over as a company, we closed over $2 billion of this product, and there's plenty of opportunity for it. In the first quarter of this past year, homeowners had $21 trillion of tappable equity. That's a huge number, which equates to about $302,000 of equity and a 45% CLTV, with values have gone up on homes because people are not letting go of their homes. The experience for the borrower is very simple. As I mentioned, it's an automated underwriting, it's a digital underwriting, but it creates a transparent and a very fast process. In seconds, they start to see the process as it flows through. For you as the loan officer, you're just going to take a simple 10-question application for the borrowers, and then you're going to let them run from there. And then we're going to take it from there once the borrower has accepted the offer. The other thing is that the initial offer up front is just using a soft pull credit report. I couldn't think of it. Apologize, people. A soft pull credit report. You do not need to run credit. Our system will take care of it for you. If the borrower doesn't want to move forward with it, no harm, no foul. It was a soft pull credit report. They can move on from there. But otherwise, you don't need to run the credit. You do not need to chase down documentation. Most of it is done digitally, but if we do need that human touch to grab some other documentation, our team is going to take care of it. You're going to qualify on the interest-only payment. Again, gives the buyers more power, or gives the homeowners more power to their property and to their payments. The borrowers now have the opportunity to link business bank accounts for their income verification. So not only are they able to link their personal bank accounts if they have salary or fixed income, but now if they're self-employed, they can go ahead and link their business bank accounts. And we will do a snapshot of that and take an expense ratio and qualify them off of that. The other thing that makes us unique to others in the digital market team is that we have a title curative team. So if you do need to pay off judgments at closing, any liens, any existing HELOCs, you can go ahead and do that with our product. We will allow the borrowers to close in a trust, but it must be a revocable trust, no irrevocable trusts. Borrowers also have instant real-time closing. They can click now for online remote closings. I get a lot of questions about Spanish notaries. We have that available as well to them. Certain states, keep in mind that there are certain states that do require the borrower close in with a live notary in office notary closing. So do keep in mind, not every state allows for remote closings. The other thing that we offer is real-time payment funding. It's just like a Venmo. So when the money hits the account, it goes in there instantaneously. So we have closed these on Saturdays. We've actually had funding occur during the holidays. We had some that were available on Thanksgiving, and we had a couple loans actually fund on Christmas Day and New Year's Day. So some of the features of our HELOC product: it is a 5-year interest-only variable rate. It is tied to prime, and if everybody knows what's gone on lately, while first mortgage interest rates haven't dropped that much, the beauty is we've benefited from prime dropping. Prime is now currently at 6.75%. So it is a variable. It is an interest-only draw period for those first 5 years. After those 5 years, it converts to a fully amortized 25-year loan. Minimum loan size on this is $25,000, and we do go all the way up to $500,000 for the loan amount. We do require a minimum of a 640 credit score, and that is the score of the primary wage earner. So if the secondary borrower is a lower credit score, we do still allow that. If it is an investment property, though, we do have a minimum of a 700 credit score. The DTI will go up to as high as 50, and we will allow, as we mentioned, this debt consolidation. So if they're not qualifying, if that debt ratio is too high, the system is very intuitive. It will actually go in and tell them what debt they can pay off to qualify to get that debt ratio below 50. We offer the options of AVMs. So the system will immediately pull 2 AVMs and use the higher of the value. If there's more detail to the property, maybe it was a newer construction and they did an addition on the property and that AVM is not hitting exactly where they expected it to be, not a problem. What we will allow you to do is go ahead and say, hey, you stated value because I know I can supply the tax card and show you that they did a 2,000 square foot addition on the house that's not calculating in there. So once the borrower accepts the offer, we offer what we call a manual AVM. And then the manual AVM will come in with our evaluation team. They'll go ahead and run that. If it does not work, let's just say we don't have that confidence score. Everybody's heard about confidence scores on the AVM world. If it is an 80% or better, or if it's in a unique area that's rural and we can't get an AVM hit, we will offer the option for a full appraisal. It would need to be paid for upfront by the borrower. They would be able to opt in for a full appraisal. This is for primary residence, second homes, and investment properties. Keep in mind on investment properties, because I see this question popping up here in the chat, they must close in their individual name. We do not allow closing in an LLC. If it is in an LLC, we will allow them to go ahead and re-record prior to us closing on it. There is no seasoning with this product. So it's if they purchased the property yesterday and want to add the HELOC, or they change title or put somebody else on the title, it's one-day seasoning. So you don't need to worry about seasoning times on these. We also are pretty unique because we do allow non-owner occupants. So these are options. Maybe we have a borrower who's self-employed and is not really able to verify the income either through a business source on the business bank accounts, or the tax returns aren't supporting it. We will allow them to add a non-occupant co-borrower to qualify on this loan. The minimum draw on this loan is 75%. They can go all the way up to 100%, but keep in mind, even if they draw 75%, we're going to pay you on 100% of the line. We do also allow for those title cures. So if there is, again, any judgments, any tax liens, anything like that, we're going to go ahead and allow that to be cured as well. The personalized borrower app link, this is your ticket to your success. This is where you're going to drive your increased volume. It's going to allow you to send that out to the borrower. They can complete the application. You can post this on your social media and drive people right to your social media, whether you use LinkedIn, Facebook, Instagram, TikTok. Twitter's no longer there. What is the new Twitter? I forget the name of it, but you can post this through all your social media. And you can go ahead and drive more volume to your business. You can include it in your email signatures going out there. Send it to your entire database of past clients and new prospects, and include it in all your marketing material. It's a great asset for you. We mentioned before what we have is called a fast pass. In most cases, or many cases, most W-2 borrowers can qualify for fast pass, meaning that we've already verified the income either through a work number or Truve, which is linking some of their payroll accounts, or certain payroll companies will link through Truve. In those cases, we can close them in as little as 0 days. Again, state restrictions, because we're going to talk about Texas. Texas on primary residence does have a 12-day hold. That's the old Texas Hold'em, and they have the 12-day hold on primary residences only. They do not have that 12-day hold on second homes and investments, which we do allow at Renan. So some of the best practices for you when you're submitting the application, we always suggest that you collect a mortgage statement. We may or may not need it, but if the borrower has multiple mortgages, they have a primary residence and a second home or an investment property, the system doesn't always know which mortgage matches which, because we're not asking you for a full schedule of an REO on the initial application. So always collect the mortgage statement. It's there and available for you. If you have a mortgage that's not reporting on the credit report, or if the borrower has multiple mortgages in those particular cases, go ahead and use the key that's called use stated balance. The stated balance then will assure that we're coming up with the proper CLTV for this particular property. As I mentioned earlier, you can also use stated value if the AVM is not coming in, or you can't deliver an AVM on it because it's not clicking in there. They can go in with that, and we will trigger an AVM, a manual AVM, once the borrower accepts the actual offer and hard credit is pulled. Then we will request the manual AVM. For the underwriter document upload, do not upload any documentation unless we specifically ask for it. This is a case where less is more. Let the system do its work. Let the process flow on it. If there's documentation that we do need, perhaps we can't qualify the income, we can't get a work number hit, their bank account's not linking properly, then we'll go ahead and ask the borrower to supply that information, and you're welcome to supply that for us as well. Okay, but you can also reach out to our support team, our white glove support to your borrowers. They have a private chat for you as an MLO. So you may have a question on the loan, but you don't really want the borrower to see it. That chat is available. It's through our help desk right in the loan, and you can chat with an agent there. Again, it is available during business hours when people are manning that. The borrowers may also contact the support through the chat, through the phone, through the email. And then for loan officers, you can contact through the chat and the email. You also have your account executive who is very talented and has a wealth of knowledge on this product. So you can certainly contact your AE on those type of things. We will try to communicate with you as best as possible. We have people actually manning on your files 24/7 over here at Remen, and we will stay in touch with you on that, and we will communicate that. But we do understand it's your relationship, and sometimes the borrowers will reach out to you. We do understand that, but we want to make you look like the hero. And then stay up to date. We do make improvements every day on this product. We make changes on that. We do have a training deck that I will include for you in here if one of the AEs, because I see the AEs popping in here. If somebody can make a link for the training deck in the chat, that would be fabulous. And this will give you real-time updates and real-time rates and changes to the guidelines. And if you have any questions, my contact information is there. I am the National HELOC Production Manager. Carl, who introduced us here, is available as well. He's the Director of National Sales. But of course, always start with your account executive. They are your life's blood in this partnership. Thank you.
Kara, I think we have a little bit of time to answer a few of these questions. One question that came up about using bank statements being self-employed. I think that's a really valid question.
Yeah, sure. Let me open up the chat here so I can see. So the question is, I see some people did ask some questions here. Let me just try to find
a lot of these have been a lot have been answered, but I think it's a good idea to at least address a couple of these to everybody.
Okay, so there was a question about investing in another property if they wanted to take cash out to invest in another property. I did mention that earlier. Yes, they can do it to buy a second home or an investment property or buy a property for a family member.
So, Kara, how about there's one that do you offer bank statement program for self-employed borrowers?
Yes.
That's a good one.
Thank you for catching that because I'm trying to read through here. Yes, we do. We do allow a bank statement program. It is a bank account linking. I always like to clarify that because this is not like QM where you send in the bank statements and the underwriter is going to analyze the bank statements. You are going to have the borrower link their business bank accounts via Plaid, and the Plaid system will actually calculate the income for them. It does take an expense ratio, which is generally about 35% of the gross income going into the account. It's generally about 35% of an expense ratio, and the system will qualify it, and it's a 12-month snapshot of the income. We also allow them to link personal bank accounts along with their business bank accounts, but just like the non-QM world, you can't take personal deposits, put them into your business and use it as income. It is intuitive enough to know that it's looking for business income, not deposits from a personal account.
Okay, how about the initial draw, Kara, with the 75%? Can they prepay that down right away?
They certainly can. We do not have a prepayment penalty or on this product, so they certainly can go ahead and pay it down if they need to pay it down or want to pay it down and have availability for it later.
Also, we should mention there's also no EPO on this as well, along with the no prepay. Kara, why don't we just real quickly just touch upon condominiums, because I think there's a big advantage there as well.
Oh, 100%. And, you know, I'm from Florida here. So I always say this is welcome to the world of condos. You know, we are really struggling with, you know, condo financing here in Florida because of everybody knows about the Surfside. This product does not require any condo approval. we will go ahead and give it to them on condo. So if the borrowers do have special assessments, if the association is short on reserves and now they've raised the assessments or to cover the reserves or anything like that, or they are doing some of that structural work that's now being required from these 15 and 25-year inspections, they can go ahead and finance it with the HELOC product as well.
Okay, good.
Okay.
Does anybody have any? We have some questions here about compensation and different items as well. We're very similar to the other lenders that are out there. It's a 2% compensation that goes to the broker. We do pay by ACH, so as soon as that loan funds, you're paid as well right away. You're not waiting around for 2 weeks or 30 days for your pay as well.
I do see a question for max CLTV on primary and investment. Primary will go as high as 80 on the CLTV, including second homes. Investment properties is a 70 CLTV.
Licensing, Kara. If I'm a loan officer, I'm licensed in one state. Can I originate in other states as well?
No, you have to be licensed in the state that you are originating in. This is not like the business purpose loans of the non-QM. And these are strictly for residential, Nick. You had asked if these are commercial properties. These are residential only.
Okay, and does the non-occupant need to be on the title as well, especially if they've been recently added?
Yes, they will need to be added to title. If they're a borrower, they have to be on title. However, not all members who are on title need to be a borrower. They just have to acknowledge the note and sign appropriate documents. So.
I think it's also important to note, Kara, with title as well, we have the resources to help with clearing as well.
Yes, just up to 350,000. We do not require title insurance. We just do the title pulls on that. But again, as we mentioned before, if there's any changes that need to be, judgments or payoffs or anything like that, we will do those title cures as well. I do want to make one mention because this question comes up all the time because I'm not going to mention it and then somebody's going to run this through. Plaid is a national system. So a lot of borrowers, sometimes borrowers are like, oh, I don't want to put my information in. This is a national platform. It's not proprietary to Nifty and Remin. It's many companies use Plaid as a system. There is one banking institution that I know of that does not link to Plaid, and that is TD Bank. I don't know if that's because it's a Canadian bank, but they do not subscribe to Plaid. So if your borrower has accounts that are listed with Plaid, unfortunately, you're going to have to go into a full documentation system of income.
So what I just did, I just actually put my email address. You obviously have Kara's as well in here in the chat. If you're not currently approved with Remin Wholesale and you want to, or you want to ask questions, by all means, reach out to us. We probably have the most tenured, educated sales staff that's out there. So we've got an incredible team of account executives that we'd love to connect with you. If you have an account executive already and you're approved, by all means, reach out to them for any questions. But this product, again, like I said in the beginning, some of you may have not been on, we are funding in the hundreds and hundreds of millions of dollars a month on this particular product. We cross.
All right, team. I'm going to stop the video here. The Q&As actually helped us to understand that we need to be licensed in these states. So I'm going to go over two things. One is about our licensing history on the NMLS is updated now. I'm going to share our screen. So Giving Tree right now, we are now licensed in 3 more states, including Illinois and Maryland, North and South Carolina, New Jersey are coming in the way. I'm working on the Kentucky and Virginia lender license as well. So hopefully by end of this quarter, we'll be able to have complete of 19 lender license overall. So if you have any questions, please reach out to Brenda or Gia for any additional questions. Again, any licensed individuals any licensed stage that we have will be used, and if not, capital end will be used for any FHA and out-of-state license, files. And second, there is a new product that we launched with a company named Windsor Mortgage. So we have an approval, I think sometime yesterday evening. So we received the underwriting guidelines, and I wanted to share some of the underwriting guidelines and the qualification details. I'll go over really fast. I don't want to go over the time. So if you need to hop off, you can, but I'll continue.